Okay, so today I have a good friend and colleague, Andrew Burkhart, on today to help us answer the big question. We have a new phase of Nocti coming in. Everybody's really excited, Seabrook Village, and this is the first time in a long time since COVID where you can go to a builder and you don't have to buy a spec home where everything's picked out for you. You actually get to choose your lot, choose your home, choose your design, and of course, you get to go to Design Center. So believe it or not, this is exciting for some people. But then, of course, the big question comes up, what about interest rates? So if this is your first time to the channel and you want to know everything about the good, bad, and ugly here in Jacksonville and the surrounding areas, then make sure you subscribe and don't forget to tap the alerts bell so that you can be the first to know about what's going on here in the market in Northeast Florida. Hi, my name is Greg, and I get calls from people like you every day. They're making a move to the Jacksonville area. Whether it's in 9 days or 90 days, it doesn't matter. Shoot me a text, give me a call, send me an email, and I'll have the information in the description below. So as I mentioned, today we're going to talk about interest rates. What about them? There's still a lot of opportunities right now to finally get a house that you want. It's turning into a buyer's market, and there are opportunities. So what about interest rates? Well, today I interview a good friend and a professional in the business, in the mortgage business, Andrew Burkhart. So let's hear what he has to say, and let's see what kind of products and solutions he has. So let's get after it now. So I welcome you, Andrew, a mortgage broker, the man that has helped many of my clients out in all kinds of situations. Welcome.
Thank you very much for having me.
Yeah. So the big question, when somebody asks, and just to educate people a little bit, just before we get into all the different ways you can work around these current interest rates, when somebody asks, well, the Fed's going to raise the rates another 0.75 points, what does that mean? Does that mean that the rates are going to go from 6 to 7 or 6.75 right away, or how does that work?
So it's actually, yeah, that's a great question. A lot of people have this conception that, when the Fed raises the rates, the mortgage rates go up right away. That's not the case. So what the Fed's doing is they're raising the rate that they lend money to banks. So it doesn't have a direct reflection on it, but it does influence the mortgage-backed securities market, or the MBS. So MBS is what drives mortgage rates. That's where mortgage lenders are looking, because that's where they make their money, is like selling the mortgages on the secondary market. So it does have an influence, but it's not a direct influence. And lenders have been doing this a long time. They're pretty smart. They know kind of which way the wind's blowing. So oftentimes we'll see if the Fed kind of does what they say they're going to do, rates usually won't react. The lenders have already kind of baked that pricing in about a week ahead of time. So when we're getting up to that meeting, if the Fed, kind of sticks to their guns and sticks to, hey, it's going to be 0.75 this time, or if it's going to be 100 basis points this time, the market sometimes breathes a sigh of relief, and sometimes you'll see rates get better that day. So definitely not a direct increase by any means.
Right. And I always try to tell people, every situation is different depending on the individual. And I always say, look, is this a long-term purchase?
Exactly.
Because that's really going to affect you also making a decision on what product would be best for you.
Exactly.
I notice now, because it's a buyer's market, you're seeing more inventory. There's more builders now with different products coming out and cancellations. So I try to tell people there could be opportunities. There's a lot of incentives out there for buyers to not only negotiate price, but all these incentives that builders are offering as far as cash towards closing, design center and whatnot. And those builders, of course, incentivize people with preferred lender, which they either have in-house or they own that lender, or they use a third party. When should a buyer determine, especially buying new construction, if they should be using a preferred lender lot? Which case would it be where they not necessarily be better off with using preferred lender?
Oh yeah, absolutely. I think it really comes down to just whenever you're trying to buy a house in general, shop around. It does not hurt to apply with the preferred lender, with the in-house lender, with a private mortgage broker like us. So a mortgage broker like like myself, we work with dozens of different lenders, so we have a lot of flexibility to shop around. An in-house lender is typically going to be a direct lender, but the benefit there is that especially in this market, builders are throwing money at that. They're buying down the rate for you. There's a lot of incentives that they're trying to throw at you. The trade-off to that is sometimes the in-house lenders will have what are called overlays. So they have more strict requirements than, say, a private mortgage broker might have with our lenders. So it really just comes down to shopping around. If you can qualify for that in-house lender and get 12, 15, 14, $30,000 towards your closing costs, absolutely, that's a no-brainer. Go for it. If you can't qualify with them, it's good to have a conversation with a mortgage broker like myself to just have us as a backup. That's something I do with all the builder partners I work with. I'm a solid backup. I'll tell you all day long, if someone's going to give you a check for $30,000, even if my rate's a little bit better, go with the builder. That's great. We'll turn around and refinance you later, no problem. So, so it's always good to shop around. And then, of course, always compare loan estimates. That's the big thing, making sure that you've got somebody who's on your side, especially like a great agent like yourself, Greg, to kind of help navigate that and make sure that they're getting the best deal possible.
Yeah, because if you're getting a good rate up front and it's too good to be true, that loan estimate is going to tell you if you're paying too much on the back end.
Exactly.
Correct? Yeah.
Correct. Yeah. Because sometimes they'll try to trick you with it. Well, I won't say trick you. That's probably not the best word, but they'll try to incentivize you with a really good rate. We'll come to find out you're spending $10,000 to get that rate, or whatever the case might be. So you really got to kind of compare them apples to apples. The loan estimate is a standardized form. Every lender has to use that form, so it's a really great way to put them literally side by side. Here's what they're going to offer you. Here's the payment. Here's what they're going to offer you. Here's the payment. So, and having a loan officer or a good, realtor to help you kind of navigate that and look at that and really just try to drill down into it.
Yeah, yeah, for sure. I always worried about that when a deal is good. Would a builder pad out the fees on the back end to be able to justify that? Money has to come from somewhere, right?
Come somewhere. Yep, exactly. Yep.
Yeah.
And you see that too, especially with taxes. So a lot of times you'll see taxes on the unimproved land. They'll show you, oh, your property taxes are $50 a month. Well, that's not the case. Once the house gets built and we find out it's worth $500,000, property taxes are going to go way up. So that's something that at least I always do when I'm going to calculate your future taxes, what it's going to be. You might not close with $500 or $600 a month in taxes, but that's what it's going to be eventually.
Yeah, that's another big thing that people miss is really understanding what their costs and property taxes are going to be, and they're surprised when they realize that it's a lot higher than they anticipated. So another good reason. I like the idea too that you said always make sure you get multiple quotes. Always. And people need to understand: is it the case people don't do that is because they're worried that all y'all are pulling their credit? How do they say to a preferred lender or yourself when they want to find out that loan estimate? What should they say to you then?
Yeah, so a lot of people do have that conception that it's going to be multiple pulls on your credit, but thankfully, the first time a lender pulls your credit, a mortgage lender, you have 14 days to shop around with any lender. So that's the best time to shop. When you're going to apply with the in-house lender, that's usually when I recommend when you're at that stage where you're about to sign a contract and you're going to apply with the in-house lender, go ahead and apply with somebody else, a mortgage broker or two, perhaps your local bank. ViStar runs these crazy promotions every now and then, or same with maybe Federal, because again, they've got a pool of money that they can play with. So sometimes their rates will beat ours, but more often than not, a mortgage broker is going to get you far better rates. The only time we really get beat with an in-house lender or the preferred lender with a builder is if they're throwing those incentives at them.
Okay. Does that come, that would you think that would come out of their marketing budget, those additional incentives? Yeah. Okay.
We've seen that quite a bit. Most builders are allocating between $5 to $20 million in marketing, buying down the rate. You'll see signs all over the place. Ask us about rates under 5. That's because they're throwing a ton of money at that lender to buy the rate down for you.
Yeah. Okay, that's interesting. I didn't actually know there was a 14-day period where you should be shopping all your lenders within that period of time, so your credit's not being pulled multiple times.
Yep, the inquiry should go up, but there's no point impact.
No point impact on your credit score.
Exactly.
Okay, that's good to know because it's just like shopping for anything. You should be, and people, I guess they feel more comfortable with the last lender they used to buy or sell a house, like they even remember how that transaction went. They just, I'm not saying get lazy, but just feel more comfortable using their bank, even though even though they may not be offering the best rate
Yeah.
when you're buying the house. So,
Very
okay, so I mean, there's a lot of really interesting products coming out there. And again, I have to state to people, it's really important to realize that that's why you're calling a professional like Andrew that's going to be honest with you, that you can trust,
Sure.
which will look at your financial situation. Everybody's always afraid to approach somebody with that, and you guys do it daily, a million times over. So I tell my buyers, listen, he's heard it all and he gets it a million times a day. There's
Right.
nothing he hasn't heard, and that's all he hears all day. So you just got to give him the picture, the financial picture, and then that way you can really figure out what's the most ideal loan that makes sense for you and in your
Right.
time period, how long you're going to be in the house and whatnot. So what kind of products are you offering or seeing out there for people as different options? Because there are a lot of options right now.
Oh yeah, absolutely. So as the market's gotten worse, lenders are just like everybody else. They're trying to make money too. They're coming out with new, really cool programs. A lot of these have been around forever, and as a company, my company, Fiber Mortgage, we've been doing them forever, but they've started to become more popular now, as we need to get a little more creative. So a really popular one is what's called a 2-1 buy down.
Mhm.
Basically, and this doesn't necessarily work just for new construction. It also works for existing. Essentially, you agree, the seller agrees to pay prepaid interest for you up front to buy down the rate. So let's say the rates are scary right now. They're 7.5% right now, roughly. So a 2-1 buy down means for that first year, you're paying interest rate, or your effective interest rate is a 5%. So it's 2 points off of that interest rate for the first year. Second year is about 1% off, or I didn't say about it, is 1% off. So 2% off the first year, 1% off the second year. The lender doesn't care because that's basically getting paid upfront by the seller. So it's either the builder, or if it's just a regular existing purchase, it's getting paid by the seller. So for you though, the savings are tremendous as a buyer. You're basically, so for for the first year, I want to here get a little spreadsheet, kind of give you a quick little calculation. So on a $500,000 house, you're going to be saving about $600 a month, which is huge.
Huge difference on your payment monthly.
Exactly.
What does it max out at then, the rate?
Oh, so it's basically just based on whatever the rate is at that time. So if rates go up or down between then, it's just 2% off whatever locked rate you get.
Okay, but you still have to qualify for what the rate will go up to after the period ends.
But on the normal rate, it just gives you a little bit of a bonus for those first couple years, which, and hopefully, knock on wood, we'll see rates go down over the next 2 years. So the 2-1 buy down is especially popular if you can get the seller or the builder to pay for it. It's just a really great way to give you some breathing room while rates are high, and then as soon as rates go back down again, turn around and refinance that bad boy.
Right, and if you do a 2-1 buy down, and the seller or the builder, it's sort of like they give you a little piggy bank that's basically paying for the difference of the current rate and the buy down rate, right?
Actually, they're actually paying the builder up front, or paying the lender up front. So whatever that, let's say it's $12,000 or whatever the case is, they're basically paying that up front to the lender. So the lender's just basically giving you credit for that and then just charging you the difference, essentially.
What if you sell the home earlier and you don't use it all?
So each one's going to be a little bit different on that, but for the most part, it's going to be lost. So that's...
Oh, really?
Mm-hmm.
Okay. In some cases, I've heard that in some of these buy down rates, they refund the customer whatever they don't use. Okay.
A little bit different. So I think we've got about 6 lenders offering the 2-1 buy down, and so it's going to be lender specific on that and how they're going to.
Okay. Yeah. Again, that's why you want, when you're shopping these products, you're going to make sure you ask all those questions, and that when you're using an agent, that they're also guiding you to make sure that you're asking those questions in the loan product that's going to work best for you. Because if say you're in the military or something and you don't know how long you're going to be around, that goes also with the ARM loans. So what else are we seeing out there? Are you seeing 5-1, 7-1, 10-1 adjustable rate mortgages?
Yep, we're seeing quite a few. And with adjustable rates, there's essentially 3 different ones. You've got the 5, 7, and the 10-year. So you'll notice you'll hear the terms 5-1, 5-6, 7-1, 7-6. So the first number is going to be the year. So that's how long that you're locked in for that fixed rate. You'll either see the 1, which means it'll adjust every year after that fixed period, or you'll see the 6, which is every 6 months. Those are the 2 most common that we're seeing right now. So a 10-1 ARM, for example, would be you'd have a fixed rate for 10 years. After the 10-year period, that rate will adjust based on the prime rate every year. So, and then of course, the 7 is a 7-year fixed period, 5 years of 5-year fixed period. ARMs, it's kind of hit or miss right now. traditionally we would see ARMs being really competitive right now. That's not the case with a lot of lenders. We're seeing some people, of course, kind of coming out the woodwork with some special pricing, but as a whole, we're not seeing the same level of benefit we saw, during the COVID days. They tend to be pretty close to fixed rates right now, so it doesn't always make sense right now for an ARM.
Okay. From what I understood, the difference on those also, though, is that you have to be pre-qualified for the max rate for those type of loans.
Correct. Yeah, they're going to qualify you on that full rate of what it could potentially be. Yeah.
Right. In the past, I don't believe they did that. And then also there's a cap on some of these loans on these ARMs, meaning it can't, the rate cannot go past a certain number.
Exactly. Right. They'll also have fixed periods on that. So, like, for example, the most it can adjust in one period is, say, 1% or 0.5%. Again, lender specific, where, again, having somebody that's having a loan officer, they can kind of really drill down and explain what that's going to mean. Because essentially, anytime you're doing an ARM, you want to have an exit strategy. You're doing that for the short-term benefit. So you want to make sure you really dial into what that long-term strategy could be.
Yeah. Again, these are the benefits depending on who you are, as opposed to being limited to your bank lender or the builder's preferred lender. It's always good to talk to a mortgage broker like Andrew, who says, look, I've got multiple options of you to different type of products. Let's figure out which one would suit you the best. So,
exactly.
The big factor there is trusting someone who's qualified and understands those products and has your best interest at hand.
Exactly.
So, and that's why I work with you all the time, as much as I can. I'm just kidding. Cool. What else are we seeing? Anything else that we're seeing out there right now that people may not know about?
Yeah, so some really cool programs that we've just introduced fairly recently are construction to permanent loans. So these are not necessarily, this wouldn't be a good product for like a major builder like Lennar, Richmond, D.R. Horton, those. This would be more for like more private builders, more semi-custom homes or fully custom homes. So this one is actually, it's a one-time close, construction to permanent. So basically you go out and pick a piece of land, design your house with a builder, you'll close one time. And then throughout the process, whether it's FHA, conventional, or VA, you might be making interest payments while the home's being built, but there's no effective mortgage payment until the home's done. That's 10-month period, one-time close. For a conventional, it's a 5% down. So you can build a custom home for 5% down. That's insane.
Yeah.
And as a VA person, if you're VA qualified, 100% financing. You literally pay closing costs and have a custom home built. Great thing about VA too is you don't make interest payments while it's being built. So you literally just sit back and watch your beautiful home being built, and all you have to pay was closing costs.
And that's incredible, because some of these custom homes, like these $1 million Riverside homes that were a River Landing here in Nocatee, they're $1.5 million, $2 million. And when you close with some of those preferred lenders, you're starting to pay your mortgage, at least on the land or so it's really, that sounds like a very interesting product. Yeah, that would incentivize someone to build. As far as the qualifications, especially as a VA, what are the limitations on that? Obviously you still have to pre-qualify and go through the standard.
Of course, yep. So still the same, debt to income requirements. The VA, of course, is a little lighter. Conventional, a little bit tighter. You just have to follow, of course, the county loan limits before you jump into the jumbo territory. Currently, it's for 2022, 647,000 is your jumbo limit. We're thinking it's going to go up to, so far some lenders are anticipating around 715,000 will be the new jumbo limit for 2023. It hasn't come out yet. It comes out about November, right around Thanksgiving. But yeah, so it still follows conventional guidelines. If you do go above that, they do also offer jumbo programs. So if you need to go into the jumbo territory, of course, you're putting a little more than 5% down for jumbo. Usually starts between 10 and 15% when you start to get into the jumbo territory, but still to be able to build a $1.5 million house for 10% down is pretty wild.
Yeah. It's funny because there's always different periods where I'll call you up and you'll tell me it doesn't make sense to do jumbo right now. What is it? What is the landscaping now? Is it, as far as rates go?
It's jumbo surprisingly is a little more competitive right now because the conventional rates have gone so high. For those buyers that were a little nervous before because it was a 3% increase. It's jumbo rates are pretty comparable to conventional right now. Of course, the points are a little bit higher, but in terms of the actual effective rate, they're pretty darn close right now. So, for those that were kind of on the fence before, that's 6 months ago, maybe wasn't a good time, or maybe didn't seem like a great time. But it's definitely a buyer's market. There's no way around it. I know rates are really high right now, but there's a phrase going around. It's marry the house and date the rate.
Yeah, I hear it all the time. Try not to use it because
yeah.
It's really detrimental to be the person of you're dealing with in their current situation, because if you're paying massive rent and you have an option to pick up maybe a builder brand new home that's been canceled, there's some really incredible incentives right now.
Absolutely.
Where they'll literally pay all your closing costs.
Exactly.
Yeah, that's the next question I'm going to ask you. I see a lot of first-time home buyers that were just shut out of the market after COVID here in Florida for a couple of years. What would you say to a first-time home buyer and they're like, I'm sick of spending so much money on rent? How can we encourage them and get them to even move? Because it must be even more intimidating in this market, because all they hear about is interest rates, et cetera, et cetera. What would you say to that?
So for those that were waiting, and I talked to a lot of people that decided to wait during COVID because it was too competitive. And, listen, 6 months ago, that probably was a good time to wait. When a house is sold in 24 hours and 30,000 above asking, that's pretty intimidating. Now while rates are higher, and you can't ask for a better time to find the right house. Inventory has, I think, quadrupled just in the last few months alone. So the opportunity to find the right house it's much closer now. You actually have the time to go look at a house, maybe once, maybe twice, to actually inspect it, make sure it's the right fit for your family. And then again, the house has been sitting around for a little bit longer if you're going existing. And again, for new construction, the quick move-ins that they've got, that's somebody that got cold feet and backed out at the last second. So now the builders sat with the house that they poured all this money into. You better believe they're willing to make a deal to get that thing out of their inventory. So, so now's the time. Now is 100% the time. If the payment makes sense, if it's affordable, of course, you still got to meet all the debt to income guidelines and all that. But if the payment makes sense, start paying yourself. You got to imagine too. A lot of people think, oh, well, it's interest rates are 7%. When you're renting, your interest rate's 100%. So you got to compare that. Like, instead of paying a landlord, pay yourself.
Yeah. It doesn't hurt to call Andrew up and go, hey, I'm paying X amount of dollars in rent in this area, and I see, a Silverleaf or a Verano Creek or any of these major communities are offering massive incentives. Exactly. And it's not just cancellation. It's actually some of them built spec homes that are not sold yet. So you never know, but it's good to educate yourself. Well, Andrew, I really appreciate you joining me today. I always learn so much from you and trust your judgment. So I'm going to put your information in the description down below. So if anybody has any questions and they want to get that additional quotation from you and visit on a personal level, I'm going to put your information down. Is that cool?
Really appreciate it. Absolutely. Yeah. And I'm happy to answer questions too. I'm not a high pressure sales guy. I'm not going to, call and harass you. I just love mortgages. I love putting people in homes. And even if you have no intention of ever using me, you just want someone who's going to give you an honest answer, I'm happy to talk and help discuss your situation.
Yeah, I could tell you one thing. I had to ask Andrew a while ago. I was like, I don't know, where did you come from? What industry? And if you don't mind me sharing, I confide that you came from a service industry where you really truly served people. And that's what we need more in my industry. And as a real estate salesperson, is that we put our customers first and serve them. And you have an amazing serving heart. And I'd always appreciate your honest opinion, and that you're always considering people situation first and foremost. It's not just a number to you. And I will say that you've done some pretty incredible things for people that last minute with the builders that were told that they no longer qualified. You came in and really saved the day for a lot of people. And so I appreciate that, man.
Absolutely. I appreciate it. It's been great working with you. And especially I love saving the day. That's you get to swoop in like Batman and, be the hero and help save the day.
Yeah, you really are. All right. Well, on to the next call, Batman.
Awesome. That's right.
I'll talk to you soon. All right, cheers.
All right. Thanks, Greg. See you.
Well, I hope you found value in today's video. And if you are interested in building a brand new home on your preferred lot and picking out your finishes, make sure you press the subscribe button so that you can watch my next video coming out soon on Seabrook Village here in Nocatee. If you're looking for a good deal on some quick move-in homes, there's some really great deals in E-Town. So check out that next such suggested video. And well, until then, I hope to show you around town.